All right, ladies and gentlemen, welcome back. It is Monday, March 13th. And, like seemingly every other week this year, we've got some crazy news developing in the stock market. I'm sure I'm not going to be the first to tell you. So last Wednesday, Silicon Valley Bank, they, in an emergency effort, needed to raise money. They couldn't fulfill their deposits. And a couple people pulled the fire alarm on social media and Twitter and these other things, and virtually caused a bank run where what was the number? It was $42 billion was looking to be withdrawn in a day. And if you look in the previous, if you look at the last big bank that went under, Washington Mutual, it was like, $8 billion over like a 10-day span, where this was $42 billion cash in a day was looking to be withdrawn. So definitely a severe situation on our hands. We were wondering, was this going to have, leaks out into, further the financial system? Was this going to be a, nationwide bank run? What's going to happen? And then over the weekend, the Fed stepped up, said they're fully insured depositors. They're claiming it's not a bailout because they're not saving the bank, but they're saving all the depositors, and all the money passed, even what was insured. So they kind of stepped in to save the day. Meanwhile, this comes on the heels of the Fed, kind of doing the reverse pivot last week, saying they wanted to raise 50 basis points at the March meeting, which is 9 days from today. And now, the odds of that, they went from 1% last week to 73%. Now just straight up like 0% back down. So, the market's trying to digest all this news, all these different happenings, and it's causing a lot of kind of hysteria in the market. We had a very choppy day out there, very wide range. The news of Silicon Valley Bank being bailed out last night caused the market to shoot up 2.5%. By the time I woke up this morning, we were down 1.5%. We closed the day. Ironically, we closed the day flat. But it was very, very wide range day, down big, filled the gap up a decent amount, and kind of faded the close there. So I'm gonna share my screen right now. Get this baby up and let's start chit-chatting, huh? How about that? Can you see this bio on my screen?
Yeah.
All right. So right here, no secret. Quick recap: bear market downtrend. Beginning of this year, we rallied, had us wondering, were we ready for a new bull market? Since then, we've come in pretty hard, and then we bounced here off 200-day simple moving average. And then this action was last week, Fed Chair Jerome Powell kind of signaling he wanted to get back to raising rates 50 basis points. That caused the sell-off. And then that sell-off led to the Silicon Valley Bank news. And, market's been puking, and we got an oversold bounce today, but it's a lot of weird things going on in the market. So we saw a huge VIX move. VIXs went from 19 to 26 the last few days, touched as high as 31. The 10-year absolutely crashing on this news. Now it looks like the Fed could be done raising rates. Overnight it was where's the terminal rate? To now are they even going to raise rates again? Now are they going to start cutting rates? And then the final chart I'm looking at here is the KRE regional banks. Just an absolute, here's a weekly chart or a monthly chart to show the severity of the news. Wild stuff. Everyone is texting me about what should I do about my deposits, checking, savings, all this stuff. People are nervous out there, and rightfully so. So while it's good, the Fed did like a reverse pivot in that, they're helping Silicon Valley Bank and Signature Bank, but, markets don't bottom when banks are blowing up. So, I anticipate volatility, and, we probably bounce on the news that, we're probably done raising rates, but, just with the fear in the market, I don't know. I'm not really sure. We'd love to hear your thoughts, honestly. Where do you think we're going from here?
So, hold on a second. Let me share my screen. Take the money challenge. Boys getting smoked over here. Take a couple days off to go skiing, and you come back and you're, down $11.
Yeah, fucking winning, just getting in cash.
Well, it just hit today, so the early morning flight didn't really get to put that money to work just yet, but we'll do it tomorrow. I think I'll touch on a couple of things. I see a lot of the articles going around about like these CEO, the CEOs and executives selling stock before these things happen. Again, most of these executives have to pre-plan these selling. So oftentimes it's just coincidental, not premeditative. Also, again, it's not like this, that was kind of like that black swan event for this bank with that run on it. So CEOs aren't really planning for bank runs and trying to sell some stock. And just for self-preservation, if this guy had $100 million worth of stock and he sold 3%, any rational person who knew this was going to happen would typically sell all of it. And most of it, looking at some of the insider transactions that I was seeing in articles, were just in the headline. It sounds like a lot. Like when you see 3.6 million, it sounds, for the most people, sounds like a lot, but this guy's probably worth a couple $100 million. So that was just something I saw that, people like, they knew about it. And I think that's just coincidental.
I thought it was really interesting how, in olden times, it's something like a bank run, people would have to literally go to the bank. Now it's like, people shout something on Twitter, everyone goes to their cell phone, tries to move money around, and like mass hysteria can be, formulated so much more quickly than ever before because of social media and all these things and online banking. It was really remarkable to me, like how quickly these things can really happen in this environment. Kind of shows the fragility in the system, in my eyes.
Yeah. Well, I think we've seen it just broadly with like the crashes over the years of how quickly they crash and the recovery period. It's just that, of just how quickly information's disseminated today than it was, in 2000 and back
faster
then.
moves.
But again, broadly, market, that we've been keeping on this trend line. We finally broke it. Again, you and I both were kind of highlighting this the last couple of weeks in both of our own newsletters of kind of hands off, be patient as it pulls into support. Again, we want this area to hold, but given, again, people's hysteria or increased fear in the market, we probably will push through that. And again, you and I both were kind of talking about like we thought this would have been the low for the year. And now it seems like that narrative of potentially seeing a new low might be in the cards, which I don't think would be the craziest thing regardless. We did see the craziest move in the 10-year in the last like 70 years percentage-wise from that.
You know what?
What was it?
The biggest move since October 87, right before Black Monday.
I'm sorry. So
right before
a
22% drop.
But yeah, so really significant drop in the 10-year.
What does that say? What does that tell you? Are we bracing for the big sell? Is that what's about to happen? We about to
So I think right now it's just people's fears, and like you begin to text, I began to text people with their like, with their money in their account. If you like, as you said, every depositor, even in that bank, is going to be made whole. Like their money is safe, because the Fed's going to be there to protect it. Other than the FDIC insurance that would protect it, regardless of the fact. So if you're a shareholder, you're people that own SIVB, that's going to be a painful pill to swallow. And same with a lot of those regional banks. But we saw the same, not the same, but price action wise with the energy names during the pandemic. They saw, they basically all free fell. You had energy names losing 90% over that month's period, and some clawed their way back. Some put in new highs, some didn't. Some are still kind of in limbo. So I think it's gonna be the same story with financials. I think financials in general will kind of have like a little bit of a black eye in the short term. But just within that regional space, I don't see like, obviously this.
You can't like ring a bell and have everyone like go take their oil out of their accounts at once though, and like fucking crash the market. Sorry, and crash.
Yeah, I'm just saying more of, again, like not like anyone was going to switch from gas to electric, but during that time it was these old like is of course it's not gonna be apples to apples comparison, but I'm comparing the people's thoughts on energy during that period when it was the worst sector. Right now, regional banks are the worst, and the bigger sector would be financials is the most hated. And there's probably more pain in store. Just looking at the financial watch list here, if you see on the right side of the screen, I have the percentages from worst to best, and there's some these down 60%. These are nowhere near a space that we want to be trading in, unless you're a nutcase. But it's obviously money to be made on here, but it's just not really what we focus on. I just think you just avoid the regional banks, but I don't think the fear of like your cash in your checking account should be a concern, because the Fed just said, even at this bank, we're going to protect you even over that limit. So the TD banks and the JP Morgans with trillions of dollars, it's not going to be the end of the world for the bigger players.
No, yeah, no, I agree with that, but
definitely crazy stuff. This is like crazy, crazy
Right,
price
right. And
action.
that's like, yeah, that's not indicative of a bottom. That's
Mhm.
indicative of kind of price action before.
Yeah,
I
like this
don't know.
CMA range, this is a, basically a 50% intraday swing. Like that is just
Insane, right?
insane.
And
That
it's
is,
like, yeah, financial analyst buddy texted me about like these Midwestern like regional banks, these just nothing vanilla ass banks, and they're having like 60% moves,
Mhm.
It's
Yeah.
like it's like, the mom and pop bank like down the street is fucking fighting for its life.
But that's
Yeah,
again,
I mean,
that's like even there was a couple MLPs that during COVID, when all the like it was like Entry got smoked, and there was like the smaller players, the regional banks, these pipelines that were getting killed, but it's like they are just like the toll taker. They're just oil is just
right.
going through. They're not even like bringing it out of the ground. And there were companies that were trading $1 a share, paying $5 a year in dividends. And it's like if you just bought that and kept
You just
it,
bought,
it was
yeah,
like the holy
yeah,
grail. But you had to be like basically in this equivalent, like scanning these hundreds of financial names and finding that one diamond in the rough that isn't going to go to zero. But it's
yeah.
very hard, even for you or I think to trade any of these names. Like, let's see what this intraday chart was on the CMA. This is just like crazy,
I mean, they're good day trading vehicles. You can't marry stock.
yeah.
You have to go the opposite way in extreme moves. You got to buy extreme sells. You got to sell extreme rips and things like that.
Yeah. This is,
But it's like that's not where I make my money. That's not
yeah.
like
It's like this,
I've
this
done that
like,
trading a bunch of my life, and I have no really interest in like
yeah.
putting serious money to work.
Yeah.
I just seen where I make my money.
Yeah. So other than
Because
that, again, for me,
market puts, I gotta printing what?
yeah. I think even for last week, a lot of us had a very difficult trading week, which now in hindsight kind of makes more sense. So I had a
Pretty
couple.
tame, huh?
What's that?
Now that difficult week seems pretty tame, huh?
Yeah. So it's like
Versus
I'm looking at a couple of trades I got stopped out of.
Roku, for example, had $487 million cash at that bank. Didn't
Okay.
really make a big move because they were made whole before it could really affect the tape. But like,
Yeah.
probably a little bit of sleep lost over the weekend for these guys.
Yeah. So looking back at some of the trades now, and like a lot of little paper cuts. Wing, was buying off support, got shaken out. This LRCX, was buying to the base break, it kind of failed. So all these trades from last week, they just all kind of pulled in or failed. And there was one, was it GL? Again, not a regional bank, but in the insurance space. And this is a good example again of why we like and
Oh my god!
got killed. But this again, I lost barely 1%. I was buying 122, buying
Short of the
121.
century. Oh my
I know,
god!
but in the moment before it was breaking down, it's
I
like
was
this
looking
was
at it with you. I said it was a good
yeah.
chart. I have nothing against it, but
It's like
damn.
looked great, and then as it failed, it's like, but we're not a part of that. 15% drop in a couple of days is 1% loss. So that's sometimes in the moment. Like for last week, I know a lot of members were frustrated with their trading. And then if you probably fast forward to today, a lot of those trades, they're probably much lower that you're happy now that you took the tinier loss. So like last week, I was like, damn, I had a lot of, even like, I was like very heavy in this CAG. So just a super tight trade off this through this 36. And I lost like 50, what was it? Not even 50 cents, like 30 cents in the trade. And it's like, I will, the following day I would have lost $1 in it. So it was like a lot of these little paper cuts that could be frustrating from, I guess, like a mental capital standpoint, but looking at them now, it's like, I'm glad with those kind of little paper cuts. And
right. And that's indicative of the bear market choppy trading. It's like you get your paper cuts, your stop losses are doubled from a trendy market.
Yeah. And so you mentioned the Signature Bank. I just see the headline of the risky bet on crypto, but I don't know anything more on what
Oh
they
man,
did.
the conspiracy theories are so good.
What do you know any of them offhand?
So they didn't really have a liquidity crisis, but Democrats are poised to. This isn't me. This is what I'm saying. Democrats are poised to shoot down anything crypto.
Oh,
So
okay.
they took advantage of the opportunity to close the bank while while it was like a hot item. They could do it quickly,
Yeah.
and this is the biggest talking point of 2024 for Republicans.
It's just crapping on crypto.
Yeah, like what are we doing here?
Yeah. So that I think even just like how quickly they kind of jumped in was almost like the kind of like helicopter mom aspect of it, where it's just like with more so I guess with these guys where it's like we're going to take it over. We'll go back to wait. We'll let another bank buy them out, and to just stop everyone's fear of spreading, like creating this bigger issue when, businesses fail, banks
Well,
can
yeah,
fail.
I think it does two things. I think one, it does restore some stability, but also it kind of, points to how fragile the system could be. If the first domino that falls, they say, whoa, we're going to clean that up. We're going to clean that up before, we're going to take all this cash and just kind of give it to these banks, and taxpayers aren't going to pay, but they probably will. Like what happens if two more dominoes fall out of nowhere? What happens then? It's good that they stepped up so quickly, but I'm telling you, it points to a bigger problem, I think.
Yeah, I mean, it points more to the business to be able to make riskier choices. But if they were ever to like not back the depositors, like the real average person, which they did here, they said they went over, they said over the FDIC limit, like they're going to still make everyone whole. As long as they portray that message, again, people, investing world is investing. They're in the riskiest investment aspect of, the venture capital end is
But Silicon Valley, yeah.
So it's like they're already in a risky business to begin with. So it's not out of the ordinary for a business like that to get in trouble. That was just a weird circumstance. Just crazy. We haven't seen it in just so long that people kind of forget that these things actually can happen.
Yeah. It was super funny because a lot of these VCs and all these guys are big names on Twitter and stuff. They're like the most libertarian, meaning like hands off government stuff. And they're like, during COVID, when these people are getting stimmies and things like that, they're like screaming, like, don't help these people, blah, blah, blah. And then the first guy, like, the system's going to come down if we don't bail out Silicon Valley. And these guys just getting killed. It's
just self-preservation. It's like,
yeah, of course.
Yeah. So.
Now. Tomorrow, what we got tomorrow morning?
What's going on?
We got CPI tomorrow morning. We got the inflation reading. That's been the biggest market mover of the past year. So this week, and we got a ton of economic data to finish the week. I think we got a jobs report later in the week, or jobless claims, one of those. So I'm dying to see tomorrow. We get a light print, we get a heavy print. We're gonna walk into a huge gap, either up or down 2% tomorrow. I'm thinking almost guaranteed. So we got a crazy week in the markets ahead. I'm not really looking at any charts. I mean, I told you I got these market puts out of protection. I got them at a couple weeks ago. I got them when Powell did the reverse pivot. I did that. It was like the luckiest trade ever. It's before this Silicon Valley Bank shit happened. And I gave myself enough time so that if like panic does spread wide, that I can take advantage of the move. So sometimes you're lucky.
Yeah,
sometimes you're lucky.
Better to be lucky than good. I'm looking through like all the names on my watch list that I'm keeping a close eye on. All are just kind of breaking support. Just seems like our overall message of just kind of hands off, let the dust settle. Right now, this is the most important thing, and all this regional bank, turmoil. But just like anything that took over the news for weeks and months in the past, you quickly forget about it. And I think in 2 or 3 weeks, we're not going to really be talking about any of these regional banks. Maybe just shocked at the ones that get really killed and the ones that really snap back. But that, I couldn't tell you which is going to be which.
Okay. Yeah. So I don't have time to charts to go over, kind of more of a discussion-based chart talk this week. But question for you. So do you think the Fed's done raising rates now? You think that we're there? We're done?
I think so. I think I even again when I was like, we were talking about it like going into the end of 2022, where it's like eventually they have to kind of stop it. And then they'll change course. And in the moment when you're in that rate rising environment, you just think it's going to go on forever, and eventually it has to change. And I think could be one of those things where now they can lean on. They have the excuse of, well, these banks are shuttering because what we were doing, it was too aggressive. Now we need to, maybe not cutting rates. Maybe they kind of, let it chill.
Pause. I think we get the pause. Yeah, big pause.
But I think once you start doing that, once you start to shift away from like, I don't want to say like the confidence, like we're raising rates. That's the motto. And now it's, well, we don't know, where they have to like pick a decision where either it's going to be nothing for the status quo or very minor rate increases. But once you start to pivot away from that, it's hard to keep flip-flopping back and forth to we're going to be super aggressive, especially with how transparent the Fed has been with what they want to do. Or if you think about back in the 90s, people would watch Greenspan's briefcase, and they'd be like, how many papers are in the briefcase? And that was
Yeah,
like
yeah,
their
yeah,
tell
yeah.
of what they're gonna do at rates, where now it's just so obvious. People are like, we know they're gonna raise rates tomorrow with certainty, that once that shift is made, if it is with the events that just recently occurred, and that pivot does change, I think it would probably stick with less rate, let less rate rises or status quo. I don't know if they'll
Yeah.
pivot to rate decreases, because that would
Yeah.
just it'd make them look
We got less than
somewhat
a minute.
silly. Okay. What do you think?
I think the Fed's a disaster the way it's flip flopping back and forth. I think the market's got some serious fear.